If it's small extent and regardless of the color, I win. If it's green, I think both Eric and Kevin will win. If it's red, then Punti will win. Welcome back to another episode of the Backholder Pod. So I think it's the time of the year again where we will probably review the year of 2023 and then maybe provide some sort of outlook towards 2024 and maybe go around the table to share our opinions. But before that, of course, we want to review what we have said last year, right? So thankfully, the internet is forever. We have everything archived on YouTube. So I'll just quickly share the opinions and thoughts that was discussed at the start of the year, or at least, at the start of the year, 6th of January, and we'll go from there. Okay, so I will just quickly play. There's this short, I'll play at 1.5 times speed, so it's faster. It's a short discussion around what were our predictions back then, and we'll see. We'll comment.
I want to ask a question. What is your predictions for 2023? What will the final rate be for this year?
Punti, you want to start?
I think it will slow down the rate hike, so 25 basis point hike every meetings. So it will just keep on climbing until 5% each.
5% and hold it there?
And hold it there. And hold it there for long.
Okay, let's fact check this.
完蛋了.
Okay, so actually, I think it's relatively accurate. So right now, the Fed Fund rate is at 5.33%. So we'll continue.
Longer than what we expect, meaning that it will last until next year.
Next year. So you're expecting inflation to not come down meaningfully?
I think this meaningfully also depends on how it is interpreted, because let's say for you and me, we might seeing 4% and think, wow, it's already much lower than 9%, right? But who knows, like Jerome Powell can sometimes just come out and say actually 4% is still high. It's still not a number that he likes. So he might just press on there, longer than we expect.
So you're saying 5%?
Yeah, 5 each percent. Let's say 5 to 5.5%.
Wow, 5.5%.
I actually share similar sentiments to Punti though. I think in one of my live streams previously, I also made a prediction that they're going to hold this terminal rate much longer. And by terminal rate, I'm also expecting around 5 to 5.25%. So I think two fronts. Number one, I think inflation is a lot more stickier than we might think. So let's not forget that even though that time the peak inflation was 9%, right? Mm-hmm. So when the new year comes, if there is no inflation, it should be 0% year on year. So if it's still 4%, it's a 4% on a high base. You get what I mean, right? Because every year they'll keep
rebasing
year on year. So if it still stays at 3% or 4%, actually it's a very dangerous number. Because inflation will just keep compounding. Our portfolio compounds, right? Inflation also compounds at that kind of percentage.
GST also compounding.
Yeah, so that's why. So I think that's a concern. And if inflation is sticky, then they need to retain rates higher. And number two is I would think, since everybody's expecting a market rally at the second half of the year, we'll see how it goes. But I personally don't think so. I think we'll just up, down, left, right, turn one round, and then the S&P 500 will go back to scale.
Okay, both of them 5 to 5.5, right?
Kevin?
Mine is around like 5.1. It's also around there. Around there.
Right.
It's around there. Like, if you see the inflation, what's the current inflation number? Is it 7%? 7%? Yeah. So by middle of this year, it should go down to about 6, 5, around there. So it'll be about the same rate as the interest rate currently, which means that they have already reached the terminal rates. I also think that inflation won't go down that fast. There are already projections that inflation will only go back to 2% by 2025, so not that fast. But I think that it will be a slow downwards. The market rally, I don't think it will be this year. I'm just saying the crash would have ended by end of this year. So market wouldn't go another further down like 50-60%. Hopefully. I'm not saying it won't. So I think we might have already seen the worst near the bottom by either end of this year or somewhere early half of next year. That's my prediction. But then the recession will come. It will end within 1 year. That's my predictions. And 1 year, which means that by end of next year, 2024, the recession will have ended.
Okay.
I think I want to add on the inflation part. I think if you look at the inflation side, we only look at the big numbers, right? Like what 7% or what. If you look at the components, also it looks quite scary, because I think in the first round when the inflation keep on going up to 7, 8, 9%, right? That's I think the biggest component is actually energy. Energy prices has went up and so on. And recent months, right? Actually, energy prices already came down, but the other components is actually trending up slowly, like those services, salary, and so on. So I think that one is more sticky, so that's why I think that's also the reason why the Fed is very concerned.
That's also you still haven't counted in the inflation for the house shelter for the shelter. So by March or April, shelter would have already come down, so which would bring down inflation as a whole. So but in these 3 months, there's the whole winter heating thing. So energy would go back up again. But after winter comes, spring comes, then inflation will start to trend down on the whole.
I think for this sticky inflation part that what Bunti suggested, right? Especially on like services or food, right? You think about it, we all keep complaining in our own everyday life. You go down, you see your cai fan, it increases in price, your bak chor mee increase to $4-5. Even if inflation were to come down, do you think many of these merchants are gonna, okay, since inflation is down, my costs get lower, then I start decreasing my bak chor mee price? I don't think so. So that's why they say inflation is sticky. Once the price go up, it only goes up, it won't come down. Like from the
I skip. This is not Outlook. I haven't heard Eric say anything yet. I don't know where is it.
worrying
I'm
concern.
just curious, Chiking, because you're
smart,
relatively young, right?
Hey, Eric didn't answer.
Didn't say anything.
Eric damn
never be
realized-
wrong, man. This guy.
I realized the prediction
man.
part finished already. How come
This
Eric
time-
haven't say it?
This one talk about Outlook, need to be careful already. You must
Okay,
get answer
yes.
from him.
Correct. So let me stop the sharing. I think generally there's a few points that we hit lah. Number one is on inflation, interest rate, recession, and how the market is gonna work out. So I think on inflation, there were worries about the stickiness, but it seems like it's cancelled for inflation now. Secondly, on recession, Kevin says he's expecting a recession here. Also, seems like it's cancelled. I think for interest rate, we did predict that interest rate is around that level, which is 5.5%. It was a big range, but that was the predicted amount at the start of the year, right? And then the funny thing was at the start of the year, we actually the based on the dot plot, we are expecting some sort of cutting this year, but it seems like we held through higher for longer. But the bigger issue was we got the macro part right, but we translated to stock market performance, we got it wrong. So both me and Kelvin said that he wouldn't expect a rally, but he will expect the market bear to end, which is correct. So half correct. Personally, I thought it will go up, down, left, right, and then it will stay flat, which also expecting the bear market to end, but not rallying, which is also wrong. I think Bunti and Eric very smart. They abstain from making a market prediction on the stock market. So I think it goes to show again where even if you get the macro right, or even if you can expect some certain events to happen, and even interest rates staying higher for longer, where people thought conventionally it's gravity to the stock market, it didn't matter. The stock market just continued climbing. So it adds another layer of context that macro, the usefulness or utility of macro predictions. So I think just go around the table and maybe I'll get Kevin to comment first. Kevin, what's your thoughts on your initial comments at the start of the year?
I also got the inflation part wrong, right? I was expecting it to be like 5. Seems like it's now 3 point something percent. Yeah, so it came down faster than I expected. As for the market, it's like what you say. So the thing that I forgot to account for is how investors try to front run the whole thing. So it is always like this, right? Inflation down end of the year, but people try to front run by a few months. So I guess I have to take this into account next time. So that's my stuff.
Bunti?
Yeah, I think I agree. There are a few things that we mentioned turn out to be right. And I want to say this is not like super good insights, because basically what we quoted, for example, the Fed fund rate, we quote about like 5 to 5.5, right? Those are not like crazy predictions. Those are actually market consensus, meaning that the whole market, if you ask people, right, most people will believe that's the range. So I think this is why market has been performing so well, because market like what? It's not just like good news that they're liking. Then they like that things are predictable. Like, you ask market consensus, they think that, inflation will be this number, and then turn out, we are right. And then you say a Fed fund rate about this level, and then Jerome Powell don't give us any surprise, and then we turn out to be right. So when things become predictable, people feels like there's certainty, and then their mood is like getting not as worried. So they will just stay put, meaning that they might just stay invested rather than, getting panic and getting out of the market, get chaotic kind of situations, right? So we haven't seen a lot of like chaotic situations. Stuff are much more predictable this year as compared to, some crisis years. So I think that helped with the markets now. And one thing I want to mention is that when listening back, right, this is like not even like 12 months, it's probably like 11 months ago, right? You will notice one thing. What we thought is very key things to the market. For example, back then it was inflation, right? We talked about 15, 20 minutes talking about inflations. Now, if you just go to news site and check, have anyone talked about inflations? So things that looks very important at certain period, right? It will become like phased out and people don't talk about it anymore. So it seems that the focus will keep on shifting. Right now, what is trending now will not trend maybe like 3 months, 6 months later. So I think that will, how to say, like we need to pay attention to all this because things that are important to you now may not be important over the long term, and things that are important over the long term, we may not pay enough attention to it because it is not like so-called trending, like there's no news that's trending. So I think we need to differentiate these two. Yeah.
But add in a different slant to Bunti, I went to check the history, right? Actually, the consensus that time was 4.75 to 5 to be the terminal rate. And then we
not too
will
far lah. Not
go
too far.
down. We will go down this year also, meaning they
Yeah.
expect a rate cut.
Yeah.
But at least for now, the higher for longer narrative is here. But the stock market didn't care that entire idea of high interest rates staying for longer because it doesn't seem to hit the consumer as bad as everybody expected. So I think since Eric didn't really provide his opinion or his prediction, I'll not give him the chance to comment. But instead, I think we'll start the next round, which is the outlook and how. Let's do two things. Your general outlook of things, whether you want to talk about inflation or other things, and secondly, which is how the market is going to perform. Let's use SPY as a benchmark on what you expect SPY to do. Eric, you want to start?
I have no gut feel about the inflation part, but I think for locally, right, for Singapore, I think we will still see quite high inflation. Because next year, like everything is going up. Like we have GST and then the water and electrical bills all going up. And then all these things will trickle down, right? Water and electrical, you trickle to the business, then the business will pass the cost to the consumer. So at least for local wise, I'm pretty certain that inflation will be, move up consistently. And then how would that impact the market for SPY, right? I think SPY wise, I think you will generally go up. Yeah. So we are starting to see the turnaround. So my gut feel is that it should trend up lah.
You want to give a range? If
Yeah.
not, I very hard to pin you down to your outlook because it's very vague.
Why do you want to pin me down?
So that we can do another reaction video next year, and then we
Oh,
can
okay,
see what's your expectations now and how it compares. Interest rate, you want to anchor it to a number. So by end of year, what would it be?
End of the year, maybe like 4.5.
4.5. Okay,
Will
I
be
give you the
good.
market consensus now. I just look so that we have a baseline projection. The probability is there's a 28.8% chance, which is the major consensus now, is between 4.25 to 4.5 by end of year, which is December.
Oh,
So they're expecting a rate cut by May next year, which is middle of next year lah. They expect it to have the first cut, and then it will cut all the way down to 4.25 to 4.5. But it's not a very resounding consensus because now it's very splitted up between 15% 3.75 to 4% and 17% 4.5 to 4.75. So that's a very big range. So Eric has planted his flag. He said around 4.25 to 4.5%. That's the range, right? Okay. So how SPY?
SPY, maybe SPY hit 500 lor.
5,000 points. So that's around how much is that? That's around 10-15%. That's the range, right?
Yeah.
Okay, 10 to 15%. Okay, next up, Kelvin. Same thing. A few major themes that you look towards can be inflation, can be not inflation. Other things also can. And SPY
Inflation, I don't
projection.
have differing views as it will be more or less like what Eric said. I want to comment a bit about the stock market. So next year is 2024 US presidential election. So it will probably be, I don't know, the Republicans are going to send Trump again. Yeah, that one, whoever lah, versus the Joe Biden. So I went to check. Whenever they keep the current president, the market will go up. The average is about 13%. Whenever they change a new president, it's about 9%. But I don't know, for during the Trump era, right, the market did quite well because I don't know, the market, it seems like pro him. So actually, but overall, the market prediction is more or less similar to what Eric said. A few things that first, the recession thing is more or less like over. Second is the rates are going to go down next year to around, like just now you mentioned, like 4 something percent. So it will be lower. Then the company earnings are more or less going to go up. So you add all of that, these kind of things up, the market will be going up. Hopefully I'm right this time. The range is about same as Eric, it's about 10 to 15%. Yeah, hopefully I'm right again. But the other thing is also the next year for crypto, there will be this whole Bitcoin halving thing. So what I noticed is that whenever crypto moves in a certain direction, it will move first. Then somehow the market moves along with it. It seems like there's a good correlation going on. So crypto, my prediction is there'll be a bull market for crypto next year. So far we've only seen it going up like what, the 25K up to now like 30 something K for Bitcoin. Next year, my prediction is it will go up lah. But some people in my chat group is like I'm the inverse Kramer thing, where whatever I say, the market will go the other way. So let's see if that will come true next year or not lah. But my prediction is bullish for S&P 500, bullish for crypto lah. Yes.
Okay, wait. Before I let Bunti speak, I want to opine first because later I scared Bunti kena anchored by Eric and Kelvin. So I think just a perspective, cause now got four different people, right? So now I'll throw in a different perspective. I will say that I think that time when we did the first prediction in early 2023 or late 2022, right? Was because we were very affected by how the market was at, and there was some sort of extrapolation that you would think the market will still not perform because it was not doing well. Then now because the bull market came back, then SPY is up 20%. So now everybody optimistic again. So I think just to throw in a contrarian view, to be very, very honest, I actually do think that the market will do decently well because of all the whatever like elections and whatnot. And there seems to be a lot of liquidity on the sidelines. Money market funds are at all-time high. So there's a lot of people that are still not vested. There's a lot of extra money at the side. But then again, I felt like, hey, I don't want to be affected by all this. Now SPY is up. Wow, everybody hot big, right? So I'll say, I think the market will be muted. I'll stick back to what I said earlier this year. I think it'll be 0 to 5%. I don't expect a big crash, but I think the market will be muted. Yeah, that's my overall thoughts on SPY. So Bunti, so you have 2 10 to 15%, and then 1 0 to 5, 0 to 10%.
Okay, I'm not like trying to be contrarian for the sake of being contrarian. I really think that there will be some slowdown in the market. So I'll give some reasons. Let me just do a quick screen sharing. So can you all see my screen?
And
okay,
giving macro talks.
No.
Nice.
This one, right? Actually, all these informations, right? If you pay attention to, like over X, right? There are people who posted about this already. So again, like this is not like crazy good stuff, like good insights. This is showing the US delinquency. How to pronounce this word? Delinquency rate on all loans, all commercial banks. The way I interpret this is just that whether people they owe monies to the banks, are they paying back their money or not? So you see that during low interest rate environment around let's say 2022, right, and this year, right, the delinquency rate is actually very low. And now just I think over the past few months, you can see that the rate already shoot up, meaning that there are already people who are suffering from high interest rate, suffering from too much borrowing, and they are defaulting on their loans and on their borrowings. So this is one thing. I think this one will definitely hurt because I think there are other data points as well that point to this, but I don't have it here. Basically, you if you look at the credit card debt, you look at like all the borrowing numbers, right? It's like at all-time high. So people are over leveraged now, and over leverage plus the high interest rate environments, right, is always a recipe for disasters. So if you look at period, let's say 2008, this is the period when people over leveraging themselves and go and buy properties, right? And the crisis before that also, you can see that it's due to the interest rate become too high. And then people just crash the markets now. For now, I'll say hasn't happened yet, but doesn't mean it will not happen. So just pay attention to that now. Then I just want to talk about a few points that you guys just mentioned now. So I think this is the Fed fund rates that consensus is saying that it will drop over the next year. I think that this, timing wise, I don't want to comment. I would just say this consensus probably about right. But I want to say that it could sustain for long, but by the time it start to drop, right, you are not going to see this kind of like 25 basis point drop. Suddenly, they could just whack a 50 basis point drop if they see that there's weakness in the macro. So that's one thing. Then in terms of inflations, again, not much opinion. In fact, I think as long as they hold about 3%-ish and don't go above that, right? I think market is not going to panic lah. So I don't have much comment here. And then in terms of the job growth, it's also still positive. So as long as this bar is above 0, right? So it's still positive. That's good. When you see people start losing jobs, right? That's when the panic will step in. Okay, this is PMI. Also, I think it looks okay. So this one is, as long as above 50 is good. Right now it's like slightly above 50. But when we talk about like slowing down, economy slowing down, right? You will see that this number it won't be at 50, like it could be at like 40, 45. That's where you see slowdowns lah. So I think the most important one comes to S&P 500 predictions, right? I think it will be red next year. It may not be like huge crash like 20%, but it will be red. And specifically, I think it will come like second half of the year rather than first half of 2024. No? So because whatever that we're seeing now, like you look at market is bullish, or this, I think it will tend to last for a while. For a while means that maybe 3 months to 6 months, but next year, towards the second half of next year, I think things can get shaky lah. So over to you.
Okay, so we have got it. We have got a consensus. Just to round up the conclusion, I think Kelvin and Eric remains relatively bullish at around 10 to 15%. 5,000 points is the magic number we are looking at for SPX. For myself, I think I'm in the middle. I think it will be relatively muted. Whether is it muted, positive, negative, doesn't matter. I think it's more flat-ish. Bunti he plant his flag and say that it's more, it'll be red. Whether is it big red, small red, I think we will give it to him. As long as it's red, he's right. So we are betting on both the color and also the extent, right? So if it's small extent and regardless of the color, I win. If it's green, I think both Eric and Kevin will win. If it's red, then Bunti will win. So leave your bets in the comment section down below. Tell us so that you can come back and parade that you're right maybe at the end of next year. So with that, we'll see you guys in the next video. Goodbye.